Hey guys, this is Mr. Roxy coming at you live from Palm Beach. It is Thursday morning. It is November the 25th. Happy Thanksgiving to everyone in the United States who are celebrating Thanksgiving. Hope you spend some quality time with your family and friends and don't eat too much. What I want to do today is share some information with you about a new, relatively smaller energy company that I found courtesy Matt Kunke. So Dr. Kunke in Berlin in Germany alerted me to Harbour Energy a few months ago. And I followed it for a few months. We chatted about it a little and, shared some information. And eventually, I think in August, I'm going to tell you in a minute, I took a dive and thought, hey, you know what, let's take a look at this in a little bit more detail. Now, just so that you know, before I get into this presentation, let me just quickly show you something else on this document in terms of source. So I mentioned that Matt had introduced me to Harbour Resources. Their half-year results were published just a few weeks ago on September 23rd, 2021. I'm not going to go into this document. As you can see at the top of the page here, this is 50 pages long. So I'm not going to do that. What I did was I actually created a presentation where I just summarized some of the findings for you. And what I also decided to do is not to use any of the information that Matt and I previously discussed, and rather just go directly to the source, which is the company, and share some of the information with you about Harbour Energy. So what you have here is a new, unique investment opportunity. This is according to their website. A global independent oil and gas company producing more than 200,000 barrels per day, cash generative, diversified UK business, strong balance sheet. We're going to talk about that in just a minute, and a commitment to achieve net zero by 2035. So all these things are important from a production point of view. 200,000 barrels per day is a nice little business. It's obviously generating a lot of cash. They have some diversification. I need to see a strong balance sheet before I would even consider an investment. And then, of course, net zero is very important to, I don't know, at least half the people watching this particular video. So as I mentioned, I had opened a position. So I've been long in Harbour Energy since August the 13th. It hasn't moved much, but it actually is positive. I think from memory, as of yesterday, I was up about 10% or so on that position. We'll look at the stock price in just a second. Some of the highlights real from their own publication. The company came about, so Harbour Energy, where does it come from? What was it? It's an all-share merger between Premier Oil PLC and Joselito. I'm probably going to mess up this one as well for you. Chrysaor Holdings Limited. Chrysaor, looks like it to me anyway. Reported production, we already talked about that a minute ago. Operating costs, very attractive, $15.60. By the way, this is a UK company, so I might be flipping between British pounds and American dollars as I go along, but this entire report is published with the US dollar as the principal currency. Operating costs per barrel of 15.6. $15.60 is not a bad operating cost. That doesn't mean that that is their break-even point. That's different to operating cost per barrel. But anyway, at least they can publish that and tell you sort of where they're at. EBITDA of 843 million, increased profit, free cash flow of 302 million, approximately 2 billion in debt, net debt, excluding amortized fees and leverage. So 2.6 billion might or might not be a lot, depending on who you ask. So what's in the news recently? Most recently, in fact, Simply Wall Street on November 23rd, so just a couple of days ago, said bullish Harbour Energy. Insiders were rewarded last week as their $530,000 US investment inflated to $638,000 US dollars. So this is not Tesla. This is get rich slowly, but a nice little uptick for the insiders. And of course, I like to see insiders purchasing the company's stock. $530,000 of insider purchases is nothing to scoff at. Over the past 12 months, the insiders have made some transactions at Harbour Energy. President and CEO of Europe and Director Phil Kirk bought £328,000 worth of shares at a price of £3.28 per share. Insiders consider the stock to be undervalued, otherwise why would they be buying? Typically, insiders don't sell stock while the stock is going up, unless they have something like for instance, from a US point of view, a 10b5-1 program in place, much like Elon Musk has had recently. He went onto Twitter to ask if he should sell 10% of his stock. But actually, for the people who look back on Tesla and the insider trades, you'll see a few months ago, he actually implemented a 10b5-1 plan, which is a disposition plan for insiders in order to announce that they will be selling stock in the future. So the Twitter is just Elon having fun and games. Talking about Elon just for a second, just this past week, JP Morgan, the major US bank, threatened some legal action against Tesla. I'm not going to go into that one, obviously, but I just wanted to tell you this because it's funny. So Elon Musk, much like his comment about selling his stock on Twitter, having a poll, he also responded to the JP Morgan litigation by going on to Twitter and said, if you don't withdraw this litigation right away, I will give you a 1-star review on Yelp. You know, so that was like his comeback. So he's obviously having fun. He's having much more fun with Twitter than what I was having with the strategic petroleum release video that I made just a few days ago. While Harbour Energy insiders bought shares during the last year, they did not sell. So take a look quickly at the analyst recommendations here. So these are all the analysts currently covering Harbour Resources. This is from my Canadian account because I get better international and global input and information from my Canadian brokerage account than what I get from my US brokerage account if it's a ADR, which is an American depository receipt, or otherwise something that's trading on the New York Stock Exchange or NASDAQ, but happens to be a company that's headquartered elsewhere. Anyway, we have 4 analysts saying buy, 5 outperform, and 1 hold. No one saying sell the stock. Obviously, we expect some good things in the future. I do too, otherwise it wouldn't be long. Current average earnings per share estimate. Next year, 93 cents compared to the current year's 53 cents. That would be a nice uptick. It's nearly double. I looked for some analysts, reviews and stock reports and things like that. The most recent one I could find is Cfra. This is November the 18th. They're saying hold. Well, I am holding. I had no intention of selling the stock. And if you look at the quantitative model drivers down here below from Cfra, they say the valuation is positive, the quality is neutral, the growth is negative. Now, you could probably go back to the insider purchase where you can say, you know, they bought for 500,000 something and now it's worth 600,000 something. That's a nice uptick, but that's not, massive forward momentum in terms of share price growth. The street sentiment is overwhelmingly positive. I share that sentiment, and the price momentum, much like the growth, is negative. So this is true as of November 19th, but at that same time, the oil and gas prices were also declining quite a bit. Taking a look at my US brokerage account in terms of seeing where Harbour Energy is currently trading. As I've mentioned, it's an ADR, so I have to buy it OTC, which is over the counter, and ADR is an American depository receipt. The ticker symbol for the ADR is HBRIY. Current price as of yesterday is about $5.50. It's not a small company. It has a market cap of about $5 billion. It pays no dividend and it doesn't have a PE. So there's not really anything for me to report on there. And as you can see down here at the bottom left, it's trading towards the left side of that little grid, which means it's trading closer to that 52-week $4, which is the low, rather than the $10, which is the high. So it'll be interesting to see where it goes over the next year or so. Typically, when I open a position in a company like this, I plan to stay in it for at least 3 to 5 years. So we'll see how we go. This is their balance sheet. So generally, as you know by now, I'm looking for anomalies. In other words, I'm looking for changes between the last reported period and the current reported period. Otherwise, what I look for instance, down here where the big green arrow is total current assets, about $1.5 billion. The things that are listed here, whatever they might be, are interesting, but they are not necessarily material to me on a day-to-day basis in terms of how efficient the company is of managing its book its current liabilities, for instance, compared to its current assets. I would always like to see current assets at 1 or greater than 1 against current liabilities. Other things that are listed on here in terms of assets, goodwill, intangible assets. Intangible assets mean things like intellectual property. The valuation of that is kind of one of those accountanese terms, which some people attach greater value to than others. Those are numbers that are easily sort of manipulated. And what I mean by that is I'm not talking about illegally manipulated. I mean, from an accounting point of view, it's sort of the age-old question, what would you like it to be in terms of the reporting period or whatever the case might be. We look at the liabilities. Remember, the balance sheet is quite simply that the assets have to equal the liabilities plus the owner's equity, or the other way around. If you take all the assets and you deduct all the liabilities, then you are left with shareholder equity. Now you can see the current liabilities down here at the bottom is 2.4 billion. And I just mentioned a minute ago that the total current assets is 1.5 billion. So there's a bit of a delta there of almost $1 billion. I know they have facilities that are undrawn, and I know that they have access to additional cash from a liquidity point of view. But if I were Harbour Energy and I was wearing my CFO hat, I would look to maybe manage these ratios a little bit better. And sometimes it's just timing, right? So especially from a current assets point of view, sometimes you may have some cash in the bank and you have accounts receivable that are due to you, but you have to wait in order to get paid, right? The shareholder equity, nice uptick here. So just at the bottom where I put this green arrow, this is the previous reporting period was about $1 billion, and now it's about 1.7 billion. That's a nice positive uptick for shareholder equity. As you can tell, I'm not going into details here. I'm mostly looking at the bottom line because I don't want to keep you too long. Cash flows from financing activities. So we can see that they generated some proceeds from debt. And at the bottom, we have cash and cash equivalents in terms of cash flows, 424 million. So not too bad. It's a little higher than the previous reporting period. And, it's okay. It's not great. I'm fiscally conservative, so if I were, as I just mentioned a minute ago, if I were wearing my CFO hat for Harbour Energy, the way in which the business is managing those ratios, like the quick ratio, which is liquid, and the current ratio, which is like all the current assets versus all the current liabilities, would look a little different because I don't like flying too close to the sun. Prudent capital allocation. So this, once again, is from their own documents, balance sheet strength. They do have strength in the balance sheet, targeting conservative leverage profile throughout the cycle, potential for investment grade credit rating. Well, that'd be great because then you can also borrow at a lower cost. Ensuring a robust and diverse portfolio of production reserves and resources. And at the bottom here, it says shareholder returns, expectation to deliver a sustainable dividend in the near term. Well, that'd be interesting. We'll see how we go from a free cash flow point of view and how the business performs, and then maybe look back in again in the future at what that dividend might look like, unless they declare it before I look back. Assets, receivables. So I just talked about receivables and cash, right? So there's almost $2 billion parked over there. And then the equity I talked about, nice little uptick. You have items on the assets compared to the liabilities, which include things like deferred tax assets and deferred tax liabilities. So it's sort of like from a pure mathematical point of view, one offsets the other, but they're not necessarily the same thing. Strong financial position. So how strong? Annual redetermination of RBL facility with availability set at $3.3 billion. So they certainly have availability of cash to dip into if they needed to. Significant liquidity in excess of $1 billion. We talked about that as we went through the financials. Net debt reduced to 2.6 billion, leverage lower than 1.2 times. That's not bad. Right here on the bottom right hand screen of the side of the screen, a proven track record of rapid debt pay down post acquisitions. That's a cool sentence for Mr. Oxy, English second language, to try and get my tongue wrapped around that one. Proven track record of rapid debt pay down post acquisitions. And you can see some of the debt repayments that they made to some of the super majors. So guys, this is my sort of take and comments related to Harbour Energy's financials and their statements. If you like the content, of course, I look forward to your comments, especially if you want to look at something like Harbour Energy and tell me what you think. And of course, if you like the content, then please subscribe. But that's sort of a quick, 50,000-foot flyover in terms of Harbour Energy. As I said, I'm already long because I opened that position on August 13th. But I'd be interested if you have time. I'm pretty sure, in fact, I'm quite confident that the majority of you have probably never even heard of Harbour Resources before. But if you have time, take a look at it. And hey, let us know what you think. And for sure, Matt and I will be interested in your feedback and your comments. So on that note, this is Mr. Roxy saying thanks for watching. See you soon. Bye.